Hello and welcome to a special interview for The Wire. How serious is the economic situation facing the country? How effective are the steps the government has taken? And what more needs to be done? Those are three critical issues I shall put today to the chairman of the Prime Minister's Economic Advisory Council, Bibek Debroy. Professor Debroy, let's start with the state of the economy. We all know that economic growth has slumped to 5%, but when you look behind that, there are several sectors that seem to be under stress. Manufacturing growth and agricultural growth have come down, investments are falling, exports were stagnating and now in August have begun to shrink, and private consumption seems to be at best steady, if not collapsing. In fact, people say the only thing that's rising is unemployment and foreign remittances, and until recently, FPI outflows. What does this tell you about the state of the economy?
Well, there's several things you've said in that one question. But first, let's talk about the GDP numbers. The GDP numbers, 5% is a quarterly figure. One should not go by quarterly figures since the GDP numbers were revised in 2011-12 with a base in 2011-12. Since 2012-13, we've had quarterly numbers on two occasions when the quarterly growth rate dropped below 5% and immediately in the next quarter it recovered. So we should be looking at the yearly growth rates, not get fixated too much on the quarterly number. The quarterly number in the first quarter of this year was bad. I do believe in the second quarter also it's not going to be all that good. But as I said, what we should look at is the yearly figure.
Then let me ask you, what do you expect to be the yearly growth rate? The RBI on Friday has cut it down to 6.1. And just to give a bit of perspective, the former Chief Economic Advisor Shankaracharya tells me that like you, quarter two will be perhaps as bad if not worse than quarter one, and he believes that will happen to quarter three too. So he believes that 6.1 could be unattainable. But on the other hand, the Vice Chairman of Niti Aayog has gone on record to say that growth in the second half of the year will be higher than 7.5. So you have two polar opposite views, which is why I ask, what's yours? What do you believe growth will be?
I think the second quarter will not be remarkably better than the first quarter.
But it will be better?
Not remarkably better. The first quarter, I didn't say the second half, I said the second quarter. So far as the entire year is concerned, I am inclined to think it will be around 6%, just about 6% for the entire year, maybe a little bit less than 6. The RBI figure is just marginally over 6, it may end up being marginally below 6. The simple point I am making is that the trend that we should be discussing is 6% or thereabouts, not 5%. We should not get carried away by that 5%. The question that you are asking still remains valid. Is 6% good enough? Of course not. What should we do to get it above 6%? Precisely.
When you say that the growth rate at the end of the year could be marginally less than 6%, that suggests that Rajiv Kumar may not be right when he believes that growth in the second half of this year will be above 7.5.
Well, you are not talking to Dr. Rajiv Kumar, you are talking to me. So I am giving you my personal opinion.
And a very fair answer. Let me put you two reasons why people believe quarter two and quarter three could be either worse than quarter one or at least not much better. Firstly, domestic indicators like core sector growth, corporate returns, tax revenues, or cement and automobile sales seem to suggest a deterioration. Secondly, as the managing director of the IMF said yesterday, 90% of the world economy is slowing down, and major economies like the UK, France, Germany, America, China, Japan have all decelerated. Now, when the world's decelerating, can India in those quarters accelerate?
It's a fair assessment, but had it not been for the external world not being that kindly placed, I'd have stuck my neck out and said that at the end of the year, we will get 7%. The reason I'm saying not 7%, the reason I'm saying 6% is precisely this, because the global environment is not that conducive. All that we are sort of seem to have a slightly differing point of view is whether it is 5 or whether it is 6. I'm inclined to think it's 6, and of course the related point, that is that 5 going to therefore last for 3 quarters of this year or 2 quarters. I happen to believe probably 2 quarters.
But the interesting thing is you believe the drag is the international environment. If the international environment wasn't dragging growth down, we could achieve on our own 7%?
No, let's look at the macro part about the four components that drive growth. The four components that drive growth are essentially consumption, investments, government expenditure, and exports or net exports. The years when India did very, very well, the external world was very kind. When we did more than 9% for several years, the external world is not that kind, so therefore we are not talking about 9%. We are really talking about 7, 7.5, thereabout, and the question to ask is, do we have enough steam in consumption, investment, government expenditure to do that? Now, so far as government expenditure is concerned, whether it is union government or whether it is state governments, it is constrained by deficit reduction compulsions, fiscal consolidation compulsions. So the question is that what is the government doing or what is there to stimulate consumptions and investments? Now, on both, I think that what is happening right now is something that transcends the macro in the sense that there is a lot of negative sentiment around. For example, I am sure we will talk about the NBFC problem at some point. The NBFC problem is concentrated in some NBFCs. It is not across the board.
But can I at this point raise two concerns about domestic sentiment? Yeah. You know better than me that last week the RBI released two surveys which actually paint a fairly depressing picture. First of all, consumer confidence, and secondly, industrial outlook. Both have dipped below May 2014 levels. That clearly suggests that industrialists who have to invest or consumers who have to consume, both don't look upon the future with rosy spectacles. They actually are losing trust in a future.
This is precisely why I said there is some element of negative sentiment floating around, which give it another quarter and some of it will go away. People will begin to realize the NBFC problem, the ILFS problem, all of these influence sentiments.
You call it some element of negativity.
Yes, I didn't say all of it.
Are you being euphemistic? Some would say it's a very substantial element. Are you diminishing it and lessening it?
No. Look, your sentiments get driven by an economy. There's a difference in your sentiments being driven by an economy that's growing at 7% and one that is growing at 5%. When it is growing at 5%, obviously you are not that optimistic about the future. If it is growing at 6%, you are not that optimistic about the future when your expectation is of 8%. So some of that remains. But some of this gloom and doom is unwarranted and it will pass.
Okay, we've established one thing, that you believe growth for the year will be around 6%.
Around 6.
Maybe marginally above, maybe also marginally below.
Margin.
And the second thing we've established that there is a fair amount of negativity, and that's because growth is low, but you believe that over a couple of quarters this could reverse. Let me then pull out and ask you this question. What is it that's brought the Indian economy to this slowdown? What's the cause or explanation of this slowdown?
Well, there's several elements, but the strongest element is that, and we need to recognize this, that this 5%, 6% is happening against the background of a global economy that's not doing at all well.
Is that the main cause?
It is a very substantive cause, because when India grew at 9%, exports on an average were growing at about 17% a year, 18% a year. That's a very, very substantive contribution to GDP growth. There are some other elements which we can talk about gradually. There has been the GST. In some sectors, automobiles, which a lot of people talk about, there have been special circumstances which is connected with insurance premium, connected with consumer preferences being changed, connected with what kind of technology, connected with expectations
and
about
high road taxes, which, as Maruti chairman told me last week, have driven up prices up to 50,000 per car.
So there are some issues that are very specific to sectors. So let's leave automobiles out of it.
Let me raise one specific concern with you. How much of the responsibility for the slowdown we are experiencing, which, as you pointed out, could continue for a quarter or 2 quarters more, is because of demonetization, and in particular because of the impact it had on liquidity and because of the impact it had on employment in the unorganized sector?
When something like demonetization happens, it is very difficult to statistically control for other variables. So, statistically it is somewhat difficult to establish what amount of contribution to GDP growth happened, to the slackening of GDP growth happened because of demonetization, and how much of it happened because of something else.
Don't put a precise percentage. Give me a sense of how large the impact of demonetization was in your eyes.
So, the only credible one that I have seen, credible statistically, was the one that was done by Arvind Subramaniam. The one that Geeta Gopinath did was a derived thing based on Arvind Subramaniam. Arvind Subramaniam's estimation, and I have no reason to disbelieve them, any such estimation is based on certain assumptions, are that the effects of demonetization, just the demonetization part of it, did not last for more than a quarter. So, now we are not talking about a quarterly dip, we are talking about a trend decline. So, I would say…
But demonetization could have made it worse.
No, if it is a quarterly, if it had a quarterly effect, it did not have a lasting effect.
Can I quote Geeta Gopinath, who did her research, I believe, for the National Bureau of Economic Research in America? She's one of 4 authors. That report says cash shortage caused by demonetization generated a decline in national economic activity by roughly 3 percentage points. And the report says much the same happened in terms of jobs as well. They clearly believe demonetization is not just a major cause, probably the principal cause for the problem the economy is going through today.
All right. So, let us take this step by step. Now, we have to get into the nitty-gritty of a study. The job loss figure is based on what? It is based on a CMI survey, which says X number of jobs lost for the country as a whole, and we are ascribing it to demonetization. That aggregate CMI figure for the country is based on disaggregated numbers for different states, and in some states over the same period employment has grown. If you are logically granting me, if you are logically saying that aggregate employment has declined because of demonetization, by the same logic you will have to grant me that employment has grown in some states because of demonetization.
And you are saying that's not accurately and fairly reflected in this conclusion.
That's precisely what I am saying.
What about the conclusion about a 3% decline in economic activity?
There also, demonetized, what is the interpretation of demonetization? The interpretation of demonetization is what happened on 8th of November. Simultaneously, I have had things like a RERA. How do I statistically separate out the demonetization of 8th of November from RERA?
So, the 3% figure you again question.
Precisely. That's why I said…
This is then why you said earlier on in this interview that had it not been for the international economy dragging India down, on our own, we could be growing closer to 7% this year. Because as you say, the impact of demonetization and the impact of GST have passed through.
No, I am just drawing a distinction between demonetization and GST. GST, I think, did contribute to a growth slowdown.
And still is?
It still is.
How effective and how much a contribution is it?
It's difficult to quantify it. It's difficult to quantify.
But a major contribution?
I personally think so. If one is forgetting about sectoral issues like automobiles or real estate or capital markets, if one is looking for one single cause domestically, apart from the global thing that we have talked about, which has significantly contributed to a slowdown, I think it's GST, not GST as contemplated, but GST
as implemented.
Well,
this is very interesting because GST is contemplated. Many people believe would add 1 or 2% to GDP. That clearly hasn't happened. And the question I want to ask is, was it because that initial impression that it would add 1 or 2% was mistaken, or is it because, as you hinted just now, GST is implemented is the problem? We may have implemented the wrong GST or in the wrong way.
Let's take these in separate parts. There is an ideal GST. In the ideal GST, everything is part of GST, and in an ideal world, there is a single GST rate.
And neither apply in India.
We will come to that. Now, the estimation of 1.5 to 2% was an estimate that was done by NCER for the then Finance Commission, which is based on the presumption of an ideal GST.
So you have to scale it down depending on the GST you've implemented.
So we do not know what the growth effect of GST would be, except I'm just clarifying 1.5 to 2% was based on that ideal NCAR study.
That I understand. But now in fact, the opposite has happened. Because we don't have an ideal GST, not only have we not grown by 1.5 or 2%, it's actually had a damaging impact on growth.
Let's understand what's happening to GST. Firstly, I'm not concerned, well, we can talk about it separately. We are not talking about a multiplicity of rates and stuff like that. GST is a chain. It is a chain with the tax actually levied on the consumer, whatever level we cut it off. I am the large scale person who's part of the GST chain. You're the small scale person who's outside the GST chain. When I want to get credit for taxes that I am supposed to pay, I take a credit from the taxes you have paid. So you have to be part of the chain. The moment you are not part of the chain, I will not get the credit. Therefore, I will stop sourcing from you. I will buy from the guy who's part of the chain, or I will import.
And as a result of GST and this need to be part of the chain, many people who were suppliers cease to be suppliers, and therefore their MSMEs suffer. As a result of which you believe GST has a serious impact on growth. That I understand. Let me then put this to you. How would you describe the problem? I take it from your explanation, you wouldn't say it's a structural problem, it's a cyclical one.
No, this is neither structural nor cyclical, because this is a problem with implementation of GST.
I'm talking about the problem affecting the economy as a whole now, not just GST. Is it a structural problem that's slowing us down, or is it cyclical? It seems to me you'd err on the side of cyclical.
You see, look, no. You see, this dichotomy between structural and cyclical, patronized by my fraternity or sorority, should not be driven beyond a point, because there are elements of both in it. When one is talking about structural problems, most of the time one is talking about reforms which have been pending since 1991. Do those reforms need to be introduced? Of course they do. The people who believe in cyclical essentially they are saying that when growth goes down, when growth rate declines, then you need monetary policy.
Counterintuitive policies.
Yes, precisely.
And you're saying there's an element of both here.
There's an element of both here.
Elements here and structure.
Both have elements of truth. So we should not look at the world in a very binary kind of way.
In which case, let me come to the second part of this interview. I want to talk to you now about the steps the government has taken. To begin with, the government reversed the surcharge for FIIs, it scrapped the angel tax. Then the government announced the merger of several banks and front-loaded the 70,000 crore equity infusion. Third, it took steps to encourage and boost exports. And finally, and most importantly, the finance minister slashed the corporate tax rate to 22% and for new companies to 17%. Taken all together, do you as the Prime Minister's chief economic advisor believe this is sufficient to A, check and B, reverse the slowdown?
I think one should look at whatever the government has already done and what the government will do against the broad picture. And the broad picture is a picture that's leading up to next year's budget. And there are two quick items I want to flag before I respond directly to your question. The first item that I want to flag is the recommendations of the 15th Finance Commission will be submitted towards the end of November.
And accepted?
It has never been the case that Finance Commission recommendations have not been accepted. There was a minor occasion in the mid-80s when the dissenting note was accepted.
And the second factor you want to flag?
Now, the 15th Finance Commission recommendations will determine the division of the divisible pool between the union government and the state governments.
And that could change?
Oh, of course it could change. And of course between the states, but let's leave that aside. The second thing that will change is over and above the Finance Commission, there is a package of public expenditure known as the central sector and centrally sponsored schemes. The present package ends on the 31st of March 2020. So we will have a new package. In other words, the entire nature of public expenditure, which is contingent on revenue, will change from 1st of April 2020, both for union government and for state governments.
That I understand, and therefore what you're saying is any answer you give me has to be Understood, bearing this in mind.
This in mind.
These are two things that have yet to happen. But nonetheless, give me the answer. Has the finance minister done enough to check and reverse the slowdown?
Wait. I didn't answer the second part of your question. I didn't answer your question. I made a preliminary statement. Now, so far as the tax part of it is concerned, on GST, when GST was contemplated, GST was meant to be revenue neutral. In other words, after the introduction of the GST, overall, the government does not lose revenue. The way GST has been implemented, largely because of the revenue compensation given to states and because of the concentration of a large number of items in the exempted category, GST has led to a loss of revenue both for the union government and for the state governments.
And for the audience, I'll point out that the last GST figure for September was the lowest in 19 months, lower than even the first month.
GST revenue is affected, then obviously we cannot expect government, union and state to do the various items of public expenditure we wanted to do. Now, when one looks at the multiplicity of rates, most people will say, just hang on, just let me finish the sentence. Most people will say, we want the 28% rate to be brought down to 18. Fair enough. But simultaneously, you must be prepared to accept that the 0% rate must also be brought up.
We are collapsing into what should happen to GST rates, which wasn't what I wanted to discuss at this moment, but I'll take it up and I'll come back to my question later. You, in an interview to the Economic Times on the 29th of September, said that both the 0% rate and the 28% rate should be abolished. And you've said that leaves just three rates, 6, 12 and 18. And thirdly, you want exemptions also ended. Now, my question is very simple. Is this too risky in the present circumstances when, as I pointed out a moment ago, we had our lowest GST collection for 19 months? Or conversely, is this actually the right time to do it?
No, wait. Two separate things. Firstly, when I said 6, 12, 18, I said there should be three rates, for example, 6, 12 and 18.
It could be different to 6, 12. Okay.
Because the right to decide that is vests with the GST
Understood.
Council.
What about my bigger question? Is this the right time for that sort of reform, or is it too risky?
No, I don't think it's too risky at all, because even the states have realized they're losing revenue. Everyone is more or less agreed there should be three rates. There does not seem to be convergence on what those rates should be.
So now is the time to do it?
I think so. But you also raised a question about exemptions, which brings me to the second part of my response. Because so far what we have talked about indirect taxes, but there's the direct tax side also. On the direct tax side, it is abundantly clear, and this is what, as Finance Minister Arun Jaitley said in his budget speech, that if you want tax rates to reduce, you have to give away exemptions. You have to get rid of exemptions. We've already had that in a way for the corporate sector, because you have a provision where if you do not want the exemptions, you can opt for the 22% rate, and even more significant is the 15% rate. The next step, of course, is to do the same on the personal income tax.
In terms of income tax?
In terms of income tax.
But just a moment. This is very interesting. Do you believe the government will actually do this, or are you thinking aloud in your personal capacity?
No. I think, look, when we are talking about the corporate tax rate, it is enterprise that is
I'll come to corporate more. Stick to income tax. Do you believe?
I will. Hang on. Only incorporated enterprise under the Companies Act pays the corporate tax rate. Unincorporated enterprise pays the personal income tax rate. So now that the corporate tax rate has come down, it's certain, I think, that the government, the finance minister, will sooner or later reduce the personal income tax rates also. It is inevitable.
Are you giving a hint, and I'm being blunt in asking this, that we could see income tax rates come down in the next budget? Because it seems to be what you're suggesting. Certainly that's the logic of your argument.
When it will happen is for the finance minister to announce, but it is logically inevitable that it should happen, spliced with elimination of exemptions.
What is the new tax rate that you think would be suitable? What should 30% come down to?
That's tougher to answer.
The reason, your personal opinion.
No. Even personally, that's tougher to answer, because look, a lot of attention has focused on the 22% on the corporate side.
I'll come to that in a moment's time.
But there is a 15%, which suggests to me that in some sense that 15% for new companies is indicative of what you might want the tax rate to be on the personal income tax side, with a qualification that direct taxes, personal income taxes, have an element of progressivity about them. That's the very nature of the personal income tax.
But you're saying something very interesting, and you're only hinting or alluding at it tangentially, so I will try and spell it out. 15% is a remarkably low corporate rate tax.
It's been announced.
And it's absolutely, but it's a remarkably low one.
Yes.
And of course, there are no exemptions permitted whatsoever. But it's for new companies incorporated after October.
Precisely.
Are you suggesting that we could see a similar scale of reduction in income tax whenever it's announced?
With two qualifications. One, no exemptions.
Yes.
And two,
second?
there will be a progressivity on the personal income tax side in any case. 15% is flat. So here you will probably have three slabs in terms of 3 rates.
Yeah, but are you saying the top rate could come down to 15%?
No,
it certainly can't be the bottom rate going up, because the bottom rate is 10 at the moment.
What will happen, we'll have to wait and see.
But you see a very dramatic reduction happening.
Precisely.
Okay, let's go back to corporate tax. That's where we began. We've wandered quite a bit, but I want to come back to corporate tax. I believe, and I think the finance minister as good as said so, that she hopes the reduction in corporate tax to 22% or for new companies to 15% will actually spur investment. Do you believe it will, or do you believe that there are still several other problems that are deterring investment? I'm talking about private sector investment.
It's a chicken and egg kind of issue. It's a chicken and egg kind of issue because we need to ask, is the Indian economy suffering from a demand crunch?
Precisely my question.
Now, I think that the largest element of the slowdown is because of a demand collapsing. So per se, will the corporate tax rate reduction alone stimulate investments to a significant degree?
Your answer is clearly no.
Except perhaps in some sectors, and do remember that in some sectors there is also excess capacity. So I would look at the corporate tax.
That's the second reason why it won't. A, demand is missing, so corporates won't invest. B, excess capacity ensures they won't invest. You give me two reasons now.
So I would react to the corporate tax rate as more signaling the government's intentions, signaling that, look, there is no reason for all these negative sentiments, and signaling that something similar will happen on the personal income tax side also.
And signaling is very important.
Yes.
But the critical response that industry and economists as well want from the government at this point, when we're in the slowdown, is something that stimulates demand. And as you agreed and as you pointed out, the corporate tax rate doesn't do so either directly or sufficiently. What more would you, as the PM's chief economic advisor, want to see to stimulate demand?
What one would like to see remains for the PM's ears. But what I would like to point out to you...
Be indiscreet and share them with us too.
I retain my job because I'm discreet. But look, I think the finance minister has given enough signals that constantly the government and the finance minister and the finance ministry have been announcing newer and newer measures. So I think
very few on the demand side. Most of them tend to be on the supply side.
So maybe it will come.
And you're saying something else. You're deliberately and understandably not revealing what you want to see done on the demand side. As you said, that is for the PM's ears. But you believe, A, this has to be done, whatever the measures are, and B, you believe it will happen.
Yes, it's just a question of the timeline.
How quickly will we see it? Because with every delay in announcing these demand side measures, you're also ensuring that the dip in growth continues for that much longer.
Depends on what the demand side measure is, because remember what I already said, that the government has taken a fairly significant revenue hit. I am looking at it as something leading up to the next budget, and the budget preparations or the budget discussions are about to start.
So we'll see demand side measures happening regularly between now and the budget.
And certainly by the time of the next budget.
Let me put to you what Vikram Kirloskar, the president of CII, and Adi Godrej have recently said. Both have called for income tax cuts. In a sense, that's what you talked about. Therefore, am I right in saying that there is a sort of synergy between your opinion and that of industrialists, that income tax cuts are necessary both because they fire up animal spirits, but also because they create that room for people to spend, and that increases consumption and that increases growth?
Maybe yes and maybe no, because I'm not sort of reacting to the individuals you mentioned, but the normal tendency of industry is to say remove the exemptions for others, retain them for me. So the critical element here is reduction in rates with removal of exemptions.
And you just want to make sure that both Kirloskar and Godrej are prepared for elimination of exemptions.
Precisely, because you see, with the exemptions, the effective corporate tax rate for some companies even before the reduction would have been less than 25%. So I am not very sure that having argued for the reductions, having got them, they are going to opt for that.
And similarly, you want to make sure that when Kirloskar and Godrej talk of income tax cuts, they are aware that if these happen, exemptions have to go, and the two go together. Yes. Let me now raise with you what Pranab Sen, the former chief statistician, has said. He says the government is not paying money due to its suppliers, and secondly, it's not pushing through all the PM Kisan installments. And separately, Aditya Birla Group chief economist Ajit Ranade has said that together both the central and state governments are holding up something like 10 lakh crore worth of payments. And in a sense, this was echoed by the finance minister when she recently said that ministries have been told to expeditiously spend the money allocated to them. Is that another problem, or is it in fact wise that they shouldn't pay the money expeditiously, because otherwise you could end up with a huge fiscal deficit problem? This is one way of restraining it.
No. I think the last one should not be stretched beyond a point. It is something that every government does towards the end of the financial year. So end of the financial year.
Nowhere near the end of the financial year.
No, end of the last financial year. So that I don't think is the basic issue. The 10 lakh crore figure, it's been floating around. I don't know where Ajit has got it from. I have no basis of knowing whether that's the correct figure. So let's focus on the issue, not the number. There are projects that have already been executed. That's one category. There are projects which have already been executed and payment for those has been held up. That the finance minister has given clear instructions, certainly to the entities that are in some sense union government entities, that please proceed with the payments.
So but this side of the problem should be taken care of pretty soon.
But remember, there are the state government entities also. So these are projects that have been completed, but the payment is held.
Many state governments are BJP controlled, so if the finance minister and the prime minister want, those state chief ministers could be told, pay the money, don't hold it up, the economy needs you to pay it.
So this will not be a significant, it will not be as huge as 10 lakh crores.
What about the PM Kisan installments, which Pranab Sen made a point in an interview to me not so long ago of saying had been held up? He believes that beyond the first installment, nothing has been paid. And secondly, he says the impact of this on rural distress is huge, because otherwise people who need money don't have it and can't spend, and therefore you're adding to their distress. Whereas if you give them the money, you'll create consumption and help growth.
I have no quarrels with that statement, and I read his interview also, which had appeared in some newspaper. PM Kisan, I'm not very sure where it has held up, because it could be held up here. It is much more likely that it's held up in state government. So I will not respond to the PM Kisan directly. But on the other part of it, you see, there are a lot of construction projects which have not been completed. They are held up because of various reasons. They belong in a completely different basket, because there may be land problems, there may be issues of rescheduling them, all kinds of issues. So that is much more difficult to handle. Yes.
Because there are many causes, it's also more difficult, which also means that it won't be resolved that easily.
It won't be resolved that easily, obviously. Yeah.
Let me then put one other thing too. You clearly agree that the economy needs a demand boost. Does that also mean that we need to lessen the fiscal deficit target, perhaps let it grow beyond the 3.3%, or would that be unwise?
It would not be unwise if you have a very credible roadmap and you spell out very clearly why you have had to let go of that target.
And that roadmap doesn't exist, you're saying, or suggesting?
That roadmap, I am sure, will come with the next budget. And let me also remind you.
So therefore, before that roadmap happens, don't tinker with the fiscal deficit target?
No. Please do remember that the fiscal deficit is expressed as a ratio. So if the GDP goes down, automatically it goes up. And automatically Therefore, there has already been a widening of the number. So, at the end of the year, as a ratio of the GDP, you will find a fiscal deficit figure that's higher than that.
I'm just spelling this out in layman's terms because again it's a very important thing you've said, and I think you're the first government person to say it so openly. Because GDP growth is diminishing or declining and it's less than what the budget had anticipated it would be, the fiscal deficit figure of 3.3 would in percentage terms go up and probably hit something higher. We don't know what it will be, but it will be higher when she announces it in February.
Precisely, and remember that the revenue figures which is there in the numerator has also.
So you've just confirmed, although you've given good reason why it's going to happen, but you still confirm that the government will miss the 3.3% fiscal deficit target. It can't help but miss it because GDP growth has declined.
I don't know what the figure will be, but I'm inclined to think that target will be difficult to reach.
Given that the target will be difficult to reach, should we allow it to be even greater by indulging in a fiscal boost to create demand?
This is a tough call because there's a limit beyond which you cannot extend it. And when we are talking about the deficit, it's not just the union government, it's the state governments also. And effectively,
and together the two are at 9% almost.
Yes, and together, well, maybe marginally less, but let's not quibble about that. But what they effectively do is to crowd out, preempt all the household financial savings and crowd out private investments apart from and
so
that's
where would you as an economist like to see the fiscal deficit go? You know it's going to go beyond 3.3. What's the limit it should go up to, beyond which it would be wrong?
I would respond to it the way I responded to your earlier question. I think it is fine as long as I have a very credible roadmap that I'm spelling out for its reduction, and as long as I'm clear, this is very difficult to do, but as long as I'm clear about the purpose for which this deficit is being widened. In other words, if the deficit is being widened for capital expenditure, it's all right, but if it's being widened for revenue expenditure, it's not that all right. But
I understand.
This is easier said than done.
You're giving me a very carefully structured answer. You know the fiscal deficit target will rise, but when I ask you what level should it go up to, you said that depends critically upon whether you have a roadmap of how you spent it. And at the moment you don't have that clear roadmap.
Which and how of decline.
Which is why you don't want to give the figure up to which the deficit can go. But you know that it will go up. Let me put one other quick question to you. Obviously, instinctively you feel the fiscal deficit, although it may balloon a little, shouldn't be allowed to balloon out of control. And yet we do need to give a demand boost to the economy. Therefore, should we increase the disinvestment and do it more vigorously? The figure is already at 1.5 lakh crore. Should we enhance it, or is that not possible?
It's possible. It's yes and no, because we are talking about central public sector enterprises. The valuable part of the central public sector enterprises is the land. Land typically belongs, in most cases, belongs to state governments. It's there with the central PSC on lease. There are instances where there's litigation, encroachment, whatever. So therefore, disinvesting, and we are not talking about something as visible as Air India, when one is disinvesting a central PSC, and the government has made it very clear it is going to push through its disinvestments, there is a timeline, there is a process, and therefore you need to invite bids. And therefore, it's difficult to say, somewhat dysfunctional to say that this is the figure I am going to, it's an aspirational figure, but it's difficult to say that, look, this is the figure that I am bound to attain.
And because it's difficult to say this is the figure I'm bound to attain, it's also difficult to say that we should try and aggressively push up the amount of disinvestment that's going to happen, because you can't be sure you're going to achieve it.
You can't necessarily stipulate a figure.
Let's move away from the quantity of disinvestment to the quality of disinvestment. Would you agree?
We are talking about privatization.
Absolutely. Precisely the word I want to use. The government is now talking about privatizing BPCL. Yes. But there's a lot of concern that instead of actually being handed to private hands, it might be handed to IOC, which is another government-owned company. Would you say that if you do privatize, don't sell one entity to another government-owned entity, sell it to the public instead?
But in a sense, that statement is irrelevant, because we are not talking about disinvestment. We are deliberately using the word privatization. So we are not talking about.
But would you privatize if BPCL was sold to another government-owned company, IOC? It would still be in government hands.
No. So privatization, You see, I'm deliberately trying to refrain from commenting on a specific case. But privatization essentially means you're opening it up to various bidders, various suitors.
Let me then interpret you. You're saying that if the word used for whatever happens to BPCL is privatization, then that word itself determines it has to go to private hands. Otherwise, what's happened to BPCL, at least in your estimation, wouldn't be privatization.
Well, you are putting words in my mouth, but I won't contest them.
Oh, wonderful. Absolutely wonderful. I think we can make great progress on those terms. Let me come to the end of the interview, and I want to raise with you a concern that many people have voiced, the need for structural reform. Dr. Manmohan Singh has said the time has now come for the government to carry out the next generation of structural reforms. On the 23rd of September, the Business Standard said the government must now turn its attention to structural reforms such as those of land and labour. Do you agree?
Oh, I completely agree. But you see, Dr. Manmohan Singh was the finance minister in 1991. And some of these things were spoken about in a discussion paper that were brought out by Finance Ministry then in 1993.
And not done.
And not done. Now, these structural reforms, as is obvious, they pertain to factor markets mostly. Land, labour, land is completely in the state list. Labour is in the concurrent list, which explains the difficulty with introducing these reforms. It takes time. It's difficult to generate a consensus. A lot of political capital is lost. I'm not saying these reforms should not be done. I'm saying they should be done, but it's a longish process.
Let me take both of those that you mentioned, land and labour, one by one. This government did attempt to amend the Land Acquisition Act in 2014. It passed 3 ordinances, but it was unable to convert them into bills because it didn't have a majority at the time in the Rajya Sabha. Now, it seems to have secured one. Is it therefore time to bite this bullet again?
No, I think you're asking the wrong question. I think the question you should have asked, well, not me, but the question you should have asked in 2013.
I put words in your mouth, now put questions in mine.
The question you meaning representative of all media, should have asked in 2013 is, if land is in the state list, then why is Union Parliament legislating on land?
But that's going back into history, and that's happened.
No, but it's important to remember that.
But remember, the Union government in 2014 under Mr. Modi also legislated on land, given and despite the same concern.
When 2/3 of the states had informally promised their support.
And then backed off.
And then backed off.
But that's what I'm saying. Now 17 state governments are controlled by the BJP and their allies.
So
and secondly, Mr. Modi has 303 in the Lok Sabha, and he has a functioning majority with his allies in the Rajya Sabha. So should that land acquisition law be amended?
My response to that would be that if 2/3 of the states want it, the union government can try and push it. If not, the states have complete rights to amend that piece of legislation on their own and get it ratified under Article 254 of the Constitution. Let them do that.
The problem with your answer is 17 of those state governments are ruled either directly by the BJP or in alliance with the allies, and clearly those are governments Mr. Modi can do whatever he wants. They'll jump through a hoop at his say-so, yet he hasn't told them to pass the land acquisition
Whether he
reform.
has told them or he has not told them, neither you know nor I know.
Well, they haven't acted. That's the main point.
What I do know is I am the chairman of the advisory council to the PM, not to the CM. So let's leave that.
But the interesting thing is you believe land reform should happen, but you don't want to comment on whether this is a time to do it.
I think the initiative has to come from the states.
Okay. Let's come to labour law reform, but let me specifically ask you, do you believe there is a need for hire and fire, or do you believe the fixed term employment scheme is sufficient?
Let's be very specific. We are talking about Chapter 5B of the Industrial Disputes Act. Chapter 5B of the Industrial Disputes Act is extremely contentious and has been, not from today, since 1991. There are several countries in the immediate neighborhood, including Bangladesh, which inherited the same Industrial Disputes Act without Chapter 5B, which has revamped its Industrial Disputes Act, which is one explanation for garments booming in Bangladesh. Should it be done? Of course, I think it should be done. I think we do not need Chapter 5B at all.
So you're saying the fixed term employment policy is not sufficient, you do need hire and fire?
I would not like to use the word hire and fire. The more you and I use the expression hire and fire, the more difficult it becomes.
Let's rephrase that. Employers who are in distress should have the right to be able to shed staff with proper safety such as payments and gratuities, etc.
I would use slightly different words.
Go ahead, use your language.
I'd use slightly different words. Chapter 5B requires prior permission from government. Chapter 5A, which has existed since 1948, does not require prior permission for government. It requires the government to be informed. In other words, it recognizes that a contract is fundamentally a bilateral contract between the employer and the employee.
And you're saying this issue should be moved from 5B to 5A?
We were absolutely fine with 5A, and all of this hire and fire business is because of 5B, because of a permission required from appropriate
government. So
let
me interpret for the audience what you're saying. You're saying the need for the government permission should be done away with. Government should only be informed.
Yes.
Okay.
And let's not use the expression hire and fire. I think it's counterproductive.
But you've made it very clear. The need for government permission before you shed over 100 should be done away with. Government should only be informed. My last question. Between 2010-11 and 2017-18, female participation in the labour workforce has actually fallen by 8% to just 23%. Today, I believe it's lower than Bangladesh, which is at 30%, and considerably lower than countries like Indonesia and Thailand. Is this an issue that needs immediate concern, or is that figure of 23% and that fall of 8% somewhat misleading?
It's an area of concern for two reasons. A, the female work participation rates in India have been far lower than what they are in East Asia. They should have been stepped up in any case. You cannot have a situation where a large chunk of the labour force is outside employment and expect GDP growth rate to go up. This is reason number one. Reason number two is that on that low base, the female work participation rate has been declining. First, purely on the descriptive part. If it has been declining as it has been for the under 21 or even under 24 age groups, I tend to worry a little less, because there is also evidence, statistical and otherwise, that more and more girls are going in for education, including higher education.
Which is a good thing. Instead of having to work, they're studying.
And by the way, this trend of decline started from 1999, 2000, and certainly from 2011-12.
What about the decline in the age group above 21 or 25?
What concerns me much more is the decline in the working age groups. What we do know descriptively is that this decline is not perceptible for rural India. The decline is perceptible for urban India. Do we have an adequate explanation for that? I don't think so. So is it something we need to worry about? Of course. Do I know why it has happened? I don't think so. There are speculative hypotheses, but nothing that is very convincing.
And because you don't know why it's happened, you also don't have a clear solution what to do about it.
Yes.
Ajit Ranade, speaking to The Hindu, and for the sake of the audience, I'll point out he's the chief economist of the Aditya Birla Group, has said that the government should consider a 10 or 15-year income tax holiday for women. Would you agree with that, or would you say that's perhaps a bit too much?
I think Ajit reflects the group he works for. He looks for income tax solutions, forgetting that the vast majority of the Indian population does not pay income taxes. So if I'm going
Professor
to remedy...
Debroy, you have the capacity to be deliciously damning. You're saying in the politest possible way that this is a solution that you don't agree with.
I don't think it's going to work.
With that smile on your face, it's been a real pleasure speaking to you. Thank you very much indeed.
Thank you.
To receive instant updates on all videos from The Wire, click the subscribe button and hit the bell icon. Pay to support independent journalism. Click the link in the description and choose the amount you want to pay.